Hi everyone, welcome to Thursday where we normally do share and review. Today I'm actually going to answer a question that someone has given me. It's a really good question actually, and that's why I thought let's address it here. So before I do that, because I am going to be showing some charts, so just that housekeeping, remember that this is only certainly not intended to be personalised financial advice. If you're looking for that, you do need to go and have a chat to your own financial advisor. Right, now this email or the message that I've received on one of the videos, it's great. This person is asking, is it possible to make a video on any security on the New Zealand Stock Exchange or the NZX, which is performing as a bear investment? For example, if the New Zealand Stock Exchange falls, then this security rises. Now that leads to two great questions. So the first thing I want to address is a bear market. So a bear market is when overall the markets are trading down. It doesn't mean that because one share might be rising and the overall market is falling, that doesn't constitute a bear market. A bear market is the overall market coming down. Yes, there could be individual shares within that are rising, and that does happen. So what I'm going to address in this is basically an investment that is potentially counter-cyclical or counterintuitive to what's happening in the New Zealand Stock Exchange. Now, what I'm going to do is I'm going to share my screen and I'm going to show you, first of all, I'm going to show you this website here. So this is called smartinvest.co.nz. So Smart used to be known as Smart Shares, and they provide a whole range of ETFs, which is exchange traded funds. And if I just click on that funds and performance, you can see here, you can explore all of their ETFs that they have available, obviously performance, but you can also break it down into whether you want New Zealand or Australian shares, US, international, thematic, property, bonds and cash, or New Zealand core equity. Now, what I'm going to first of all click on is New Zealand shares. Let's have a look at that. So just by doing that and scrolling down, you can see here that you can invest into the NZSX 50 by way of these ETFs, and each one is a little bit different in that how it obviously performs. So the ticker code is this one up here in this example here, NZG, and so basically this one will mirror the NZSX 50 exactly like what I show you on the weekly videos. Okay, whereas this one here, it's still investing into the top 50, and that ticker code is FNZ, still investing into the same 50 companies. However, it's only giving a maximum weight of 5% per share, whereas NZG will actually be weighted according to how a company is weighted on an index. So obviously some of the higher valued shares have more weighting. So in other words, I think Spark off the top of my head is quite a high rated one on our stock exchange. So you have a high exposure. It might be around 15% without going in and having a look. That's just a rough guesstimate. Now, you can also, as you can see, scroll down, you can also invest into the top 20, the top 10 shares. You've also got the mid caps. So these generally they might be listed, on the NZSX 50, but not necessarily in the top 10. Then there's a dividend investing one as well. So that's one place you can go. Now, another place that we can also invest in is shares. Yes, we can go into US shares, and again, you can either invest into the S&P 500. This one here, US S&P 500, however, it's hedged, so that means that the currency exposure has been taken out of it, whereas the USF, that will have currency exposure. So what that means is that the share market could be going up. However, if the New Zealand dollar is falling against the US, then that could if it's rising against the US, it could potentially negate any gains that you've got from the fund, okay, because it can have a negative effect on it. Then there's all sorts of funds and things you can have there. Now, another one I want to show you is bonds and cash. So here you can invest into what it says, bonds issued by either the New Zealand government or New Zealand corporate companies. That's an international bond. And there is also cash that you can invest into in the New Zealand market. Now, what normally happens when you have a weak cash market, which is what we're looking at the moment, currently we're in a downward cycle with the official cash rate, and it's to be reviewed again in the next few days. It might be next week. Highly likely, it's not advice, highly likely the markets are indicating that we're going to see our cash rate come down, which obviously does generally tend to affect the performance of some of these, because what happens is normally the cash rate is not correlated with the stock market, if you like. So quite often, if you have a weak cash market, you will have a strong share market. Okay, so they're usually inversely related. However, at the moment, we've got a weak cash market and we're also showing a weak share market. Okay, so that is sort of one of the little caveats that you do have to be aware of. It's not always like that, but that is where we are at the moment. Now, I wanted to find it. Right, okay, I've selected here. I've just gone into all of the ETFs that are available, and this is one I really want to show you here under the thematic shares is gold. Okay, now the reason I want to show you gold is because when markets have a lot of uncertainty, which is what they've got at the moment, quite often people will go to the likes of gold as a safe haven. And what we've been seeing over the last little while is that gold has been performing very, very strongly. In fact, last week it reached new all-time highs again. So I'll just stop sharing that. Right, I will share this the gold chart now. Now this exchange traded fund. So as you can see here, I've put in the ticker code. It's GLD.NZ, so it's on the New Zealand Stock Exchange. Now I've pulled this up at the moment on a 1 year basis, which is actually giving me each of these candles is looking at a day. If I pop it over the 5 year, which I normally look at, it hasn't been running that long, so we don't have too much data in that here. But you can still see the overall trend of this particular share is up. I'll see if it'll bring up a comparison on the New Zealand market, which it does, which you can see here. So you can see by this red line, that's the NZSX50, that's trending down, and obviously the gold ETF here is trending up. I wonder if it'll let me put my indicators on as well. Let's try that. So we're putting on the 30 exponential. No, it's not letting me do that. Okay, I'll have to take the NZSX one off. No, it's not. I don't think it's even enough. I'll go back to the 1 year. Oh, here we go. It's allowing me to do it on the 1 year, which is on a daily. Just bearing in mind, when I look to invest into shares or even ETFs, I usually like to look on a weekly basis, but because this fund hasn't been running that long, I'm not sure when it exactly started. Looks like on here, looks like it started around October last year. So that's why we haven't got too much data on it. Hopefully it'll let me put the comparison on. Let's just try that again. Yes, it does. So you can see here by this dark red line, that's the 30-day moving average. And underneath here, we're comparing it with the NZSX50. So you can see in this example that gold is counterintuitive or counter-cyclical to the New Zealand market. Another term is inversely related. So obviously the opposite. So I'll also pop on, I'll take the NZSX50 off, and we will also pop on the moving average, but this time making it over a 15 period. Remember to change that to exponential. It just gives more weighting, if you like, to the more recent performance. And gosh, on a daily chart, you can see here that the 15 period moving average sort of crossed through the 30 back and around December last year, and you can see here it's been having quite a strong run. So that is something that you can look at gold for an alternative investment for the New Zealand market that's counterintuitive. And the beauty about trading gold like this is that you're investing through an ETF, so it will probably have exposure. In fact, if I go back and look at this, it will probably give us a bit more details on it. So it's based, even though it's on the US indices, it's based back to New Zealand dollars, which is really good. We can click on the holdings tab here, and you can see that the top 10 holdings, although it hasn't got them all written down here. But what have we got about the top 5? So you can see there where it's actually the top holdings, which predominantly is just this US share, iGold Trust, okay, which is 99.97. There's a little bit in New Zealand cash, and yeah, the net current assets. I'd have to look them all up. I'm not quite familiar with them. But here are all the documents. So you can download the product disclosure statement, which will give you a lot more information on this share. And obviously back here, the gold ETF 2024 quarter 4, that's when they certainly listed it. Okay. There's no dividend data, because obviously dividends usually tend to pay out 6 monthly. I'm not sure whether this company is going to pay a dividend or not. Sometimes they do, sometimes they don't. You would have to do your own research. But really today I'll just stop sharing. Today was really just about giving you an insight as to what to look for, historically, what type of investments will work inversely to the New Zealand market. Hey, yes, yeah, I could probably go through, and I haven't had the time, go through and have a look at the individual top 50 companies versus the New Zealand Stock Exchange. But generally, it is either your cash and bond market, which is not counterintuitive at the moment, but gold tends to be very much a safe haven. So if we start seeing the rest of the markets performing really strongly and the New Zealand market performing strongly, people might move out of gold because that fear, if you like, has been taken away. But the moment people start to see fear creep back in, people do tend to run to gold. So it's a great question. I really hope that's helped and helped explain a little bit more as to different options that are out there to you. Remember, if you've got any questions, I'm happy to address them here and help you out. So you're welcome to direct message me or just leave a comment under one of the shares, and I will come back to you. Until next week, take care.